I publicly predicted that after National Day, the Chinese stock market would skyrocket. If I'm wrong, I'll eat feces on live stream. A bunch of cowards are telling you all to stay calm, but not me. I've waited almost 10 years for this rally, and now you want me to calm down? I can't calm down at all. I'm going all in. Let's do it.
The man in this video is the vlogger called Big Blue by stock traders. Recently, he's been getting a lot of hate from netizens because many believed his prediction that the Chinese stock market would surge after the October 1st National Day. As a result, a lot of people almost lost all their savings. Big Blue, I listened to you. I've been crying up until now. I don't want to cry again tomorrow. Some people have even slapped themselves over their losses. People are sharing their battle results of losses online.
Friends, I've already lost 600,000 yuan in 2 days. I don't want to trade stocks anymore. Weren't they saying this was a bull market? Where's the bull? I came in and immediately lost money. After the National Day holiday on the 8th, everything hit the limit up. I wanted to buy, but I couldn't. I saw the prices were going to double, so I put 3 million yuan into it. But the next day, everything hit the limit down. I lost money faster than I did with my startup. I thought running a business was tough enough. This year, I've already lost millions from my startup. I was hoping to earn back a little in the stock market, but I lost over 600,000 yuan in just 2 days. If I lose any more tomorrow, I'll have to cut my losses. My employees are waiting for their salaries on the 15th. What kind of garbage stock market is this? Where are all those people who predicted the stock market would soar? Come out here. Didn't you say the Chinese stock market would hit the limit up? That it would rise by around 9%? But now all the stocks are in the red. I'm stuck, and I've already lost over 100,000 yuan. That's 3 years of my salary. My goodness, 3 years of my wages are gone. All I have left now are my tears.
On October 10th, the major indexes of the A-share market experienced another round of intense fluctuations. After the market opened, the Shanghai Composite Index dropped, turned green at one point, then rebounded. By the afternoon, it fluctuated again, with the gains significantly narrowing. According to a report by the Chinese media outlet Daily Economic News, as of the close of the A-share market on the 10th, the Shanghai Composite Index was up 1.32%, standing above 3,300 points, while the Shenzhen Composite Index fell by 0.82%, and the Chinext Index plunged 2.95%. Large financial stocks, real estate, and semiconductors saw significant declines, with nearly 2,300 stocks in the three markets of Shanghai, Shenzhen, and Beijing closing in the red. The turmoil in the Chinese stock market began on October 8th. Prior to that, the A-shares had been rising for several consecutive days in a rare rally. After the market fluctuations on the 8th, all three major indexes in the Chinese A-shares plummeted on October 9th. The Chinext index in particular plunged more than 10%, setting a record for the biggest single-day drop in its history, breaking the previous record of 8.9% during the 2015 stock market crash, and closed with a 10.59% decline. On the 9th, over 5,000 stocks across the market dropped. More than 3,000 stocks saw losses exceeding 9%, and 854 companies hit the limit down. In the CCP's latest wave of ruthless market manipulation, a large number of young investors from the mainland have become targets. Most of these new investors are born in the 90s and 2000s, with no experience of previous market crashes, nor any understanding of how brutal the CCP can be. Many of them have thrown in their parents' retirement money, their wedding savings, or even funds set aside for startups, only to face the possibility of losing everything.
It's my third day trading stocks as a 90s kid, and now I can't even smile. I've lost over 300,000 yuan today. Who said this was a bull market? Take a look. This morning, I even added 100,000 yuan to my position, bringing it to over 1.1 million yuan. And today alone, I lost more than 300,000 yuan. Oh my god. I invested in semiconductors, but today they crashed. I saw the drop, so I bought new stocks, hoping to recover my losses. But now I'm stuck again. What should I do? Should I hold on to my shares or sell them? I was born in the 2000s, and it's my third day of trading stocks, and by the afternoon, it was over. The market closed at 3 p.m. I put 1 million yuan into the stock market, and so far I've made 2 yuan while losing 42,000 yuan. I can only comfort myself by saying, hey, at least I earned 2 yuan. That already puts me ahead of 99% of the other traders.
It's not just the new traders, even some seasoned investors have been swept up by the sudden market surge and remained trapped in the Chinese stock market. A report from Zhuzhou Evening News tells the story of an old stock trader who suffered massive losses. This man, who we'll call Ah Wei, was still working in a furniture factory in Guangzhou at 2 p.m. on October 8th. During a short break, he checked his stock account, which showed a loss of 197 yuan for the day. This account wasn't actually in Ah Wei's name, it belonged to a relative, so technically Ah Wei was just managing the account, though the money in it was his. The reason he had to use somebody else's account was that his own stock trading account had been suspended in December 2021 for various reasons, leaving him no choice but to trade through someone else's account. On October 2nd, Ah Wei took a slow train back to his hometown in Zhuzhou, Hunan. The next day, he convinced his relative to deposit 15,600 yuan into the stock account to trade again. The furniture industry hasn't been doing well, and Ah Wei's salary had dropped from over 7,000 yuan in previous years to just over 4,000 yuan. After covering living expenses, rent, and school fees for his child, Ah Wei had only saved 16,000 yuan this year. Leaving aside 400 yuan for basic living costs, he put all his remaining money into the stock market, despite his relative's repeated warnings. At the beginning of 2022, the total balance in the account was 50,000 yuan. After Ah Wei's recent deposit of 15,600 yuan, only 336 yuan remains. In other words, over nearly 2 years, Ah Wei has lost 99.3% of his investment. Before this, he had already lost 550,000 yuan in the stock market. Ah Wei is from Lukou District in Zhuzhou and used to work in the home renovation industry as a freelance contractor. During the real estate boom, it was common for skilled workers like him to earn over 100,000 yuan a year. In 2016, Ah Wei entered the stock market by chance. At first, he thought he had the knack for it because things went smoothly, and he rarely faced any losses. However, the good times didn't last long. From 2016 to 2021, Ah Wei lost a total of 550,000 yuan. He even had to sell his 110 square meter apartment in the city for a low price of 300,000 yuan. Since the beginning of 2022, his investment situation has not improved, and by the time of this year's National Day holiday, he was still losing money. Ah Wei said, I put all the money from selling my house and bank loans into the stock market. It totaled tens of thousands of yuan, and I've lost almost all of it. He advises others who haven't traded stocks before to stay away from the market. He believes stock trading is far more complicated than it seems, and making money in the stock market is extremely difficult. He doesn't want others to end up like him. Actually, there are many veteran investors who have lost even more than Ah Wei. Is it true? Of course it's true. I entered the stock market in 2014, and so far I've lost 150 million yuan. In total, over the past 10 years, I've lost 150 million. If you don't believe me, I'll show you again. Didn't you say you made money this year? Yeah, I didn't lose money this year. Look, this is my account. Click on transactions, and it shows that I've lost 150 million yuan. Well, not exactly 150 million, it's 149 million and a little more. I'm just 3,000 yuan short of losing 150 million. Amid the disastrous state of the Chinese stock market, some netizens believe that heartless vloggers who irresponsibly encourage others to invest are the real culprits.
Friends, new investors don't know anything, especially on platforms like Douyin, where many people are in debt or poor. As an influencer, you have a responsibility and obligation to guide others properly. You can't just stir up a frenzy, making people think they could get rich overnight by betting everything they have. What if someone loses their house deposit after leveraging their money? Can you take responsibility for that? In the past few years, how many people in debt or unemployed have taken their retirement money, living expenses, and leveraged it all into the stock market? As an experienced trader, you should understand the risks, lead by example, but instead, you're telling people there are no risks and to go all in, turning good clients into debt-ridden ones. I've personally received 2 such clients recently. Both lost their house deposits due to leveraging their stock investments and are now borrowing from various online lenders to come to me for debt restructuring. One of them was planning to buy a house and get married with that money just a month ago. but now they're ruined, thanks to vloggers like you. And how many people had good credit until recently? They've maxed out their credit, taken out online loans, and leveraged it all in the stock market. How many defaulters have you brought into society? How many people have you left with no way out? You ruthless vloggers, can you bear that responsibility? You could say to invest cautiously in the stock market, but you can't make people bet their entire lives. Many can't afford to lose. They're in debt with no money.
However, some netizens have realized that the true manipulator behind the scenes is the Chinese government. One person posted a video online questioning the situation.
During the National Day holiday, the government rolled out a bunch of favorable policies. I just want to ask, isn't this misleading consumers? Isn't this fraud? Especially before October 8th, the stock market allowed money transfers. Was the government afraid we wouldn't be able to transfer our money in? Were they really in such a rush to take advantage of us? Are they that desperate to kill the goose that lays the golden eggs? Shame on you. The government's greed is disgraceful.
The fact that so many individual investors have been left holding the bag is largely due to official propaganda and the hype stirred up by so-called experts. Many inexperienced traders, especially those born in the 90s and 2000s, entered the market after being encouraged by government propaganda. Among these experts are Ren Zeping, former chief economist at Evergrande, who once claimed that after the National Day holiday, the market would surge and traders could close early. However, that prediction failed after the stock market crash. He later posted several comments suggesting that the first wave of this bull market's correction was nearing its end, advising investors to wait for the next wave to make money. But perhaps before that next wave arrives, China's economy will collapse. The trap that the CCP designed specifically for the middle class might turn into a grave for itself. What the CCP didn't anticipate was that ordinary people, relying on loans and borrowed money, would become participants in this trap game.
The A shares haven't gone crazy, but the loan market has. I heard that one bank lost 4 billion yuan in deposits in a single day, and over the holiday, consumer travel loans reached nearly 700 million yuan. These people are borrowing no matter what the interest rate is. They've really gone mad. Especially the post-2000 generation. Their courage is on another level. Many people from the post-80s and post-90s generation were already deeply in debt, and yet they're still borrowing money to buy stocks. Think about it carefully. It's time to wake up. We all owe a big thanks to the various loan institutions and credit card platforms for sponsoring this round of the stock market. The government thought there was money circulating among the people, so they released a little liquidity to stimulate the market, hoping to revive the big players and the middle class and boost the stock market, which would help the economy recover. But who would have thought that people would be using money borrowed from platforms like Huabei, 360 lending, and online loans, putting it all in the stock market? So the government was caught off guard, and the loan institutions were even more shocked because these people at the bottom had no intention of repaying the loans. If they win, they'll spend the money. If they lose, they'll just go work it off. As long as they can survive one more day, that's enough.
The reality is, young people who borrowed money to invest in the stock market really have no plans to repay the loans.
If they dare to let us take the fall, we'll definitely pass the debt onto the banks. We might even make history, witness history. We could see multiple banks go bankrupt together. We don't care about the credit system. Didn't they say bad credit affects the next generation? We're not even thinking about the next generation at all.
So the stock market collapse might just come back like a boomerang and hit the CCP itself. In recent days, many stock traders have noticed lower credit loan interest rates and have tried to borrow money to invest in the stock market. On October 9th, there was a rumor that one investor used 10 times leverage to borrow 50 million yuan to trade stocks. He lost everything. The authorities were quick to issue a statement denying this. However, after the incident, the CCP and the banks both issued warnings on October 9th, strictly prohibiting loans for stock trading. If found, the loans would be immediately recalled. At the same time, banks admitted that, despite preventative measures, there were still challenges in preventing such activities. Associate Professor Sen Guoxiang at Taiwan's Huanan University's Department of International Affairs and Business noted that the Chinese government's new round of stimulus policies seems to have failed to meet expectations. One reason could be the withdrawal of large capital, which has more access to market intelligence and resources, allowing it to pull out quickly before market fluctuations, taking with it a large portion of the government's injected liquidity. Additionally, as many young investors suffer losses, social dissatisfaction may rise. Therefore, borrowing money to trade stocks is undoubtedly one of the biggest risks the authorities face. If the stock market cannot stabilize, highly leveraged investors will face even greater financial risks, potentially leading to a large-scale financial crisis. Regarding the central bank's efforts to promote swap facilities for securities, funds, and insurance companies, and encourage institutions to leverage their stock investments, Sun Guoxiang said that theoretically, these measures should inject liquidity into the market, lower corporate financing costs, and encourage investors to re-enter the market. However, the poor market reaction points to a deeper crisis of confidence and structural economic problems, such as insufficient consumer demand, the real estate crisis, and declining corporate profits, issues that cannot be easily resolved with short-term policies. Xu Zhen, a veteran in China's capital markets, believes one of the reasons for the stock market crash on October 9th was that previously trapped capital had finally returned to profitability, leading to a massive sell-off. Additionally, the reduction in shares by small shareholders of listed companies and the short-term profit-taking by institutional investors contributed to the selling pressure. He said, "The fleeting rise of the stock market, paired with a bleak economy, shows that compared to trading stocks, maybe lying flat and cutting expenses is the safest lifestyle for ordinary people." Some media commentators have compared the stock market crash to the one in 2015, speculating that it might be a new financial coup. However, Sun Guoxiang believes there's no concrete evidence to suggest that this market volatility is a financial coup or political sabotage. Instead, it is more likely the result of government policies that violate economic principles, compounded by internal structural issues within the financial market. China expert Wang He agrees with this view, noting that since 2021, President Xi Jinping has been rigorously cracking down on the financial system, making it unlikely that anyone would orchestrate another financial coup like the one in 2015. The recent stock market surge is undoubtedly driven by government policy. Wang also mentioned that the current political, economic, and social governance under Xi Jinping's regime is in complete disarray. The internal power struggles within the CCP, including challenges from party elders and conflicts between central and local factions, have severely weakened Xi's grip on power. To salvage the situation, Xi has no choice but to stabilize the economy, which is why the government pushed the stock market to rise. If the CCP hopes to use a rising stock market to save the economy, stimulate consumption, and rescue local debt, it may be wishful thinking. The end result could very well be the ignition of a financial crisis, which would undoubtedly lead to a social crisis. And when the public's grievances focus on the CCP, it could spark a political crisis.